welcome back to a brand new video. And as always, if you are new to the channel, a sub would be so much appreciated. And as always, if you enjoy the content, please smash that like button for the YouTube algorithm, and please let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now we're going to do a breakdown on Audjpy from a technical, fundamental, sentiment and order flow perspective. Now starting with the technical data, what can we see? Now here on the monthly time frame, we can see how we printed this massive impulse. After an impulse, you expect a correction before the continuation, and that is exactly what the market has given us. Now taking our Fibonacci there from the low to the high, we can see how the market not only tested and rejected the 61.8 Fibonacci, which is the golden Fibonacci level, but the market also broken above this level of resistance and came back, retested it as support. So we can definitely expect the market to continue higher. Now dropping down here on the weekly time frame, what do we have? Now we can see here from a weekly perspective, firstly the market is about to print this W formation, so there's a good opportunity for us to look for some buying opportunities to that level, then potential sells maybe first before we can continue higher. You can also see how the market had broken above this weekly structure that we had there yesterday, and the market is showing some strong bullish momentum. Now on the daily time frame, what can we see over here? Now we can see how the market is approaching this previous level there that we had over there, as that acted as a level of we've got the strong level of resistance over there that we can expect the market to go and test. We also have this massive impulse, and after the impulse you expect a correction as well. We had that impulse, so we expect the correction to happen after the market went there, go and hit that previous resistance there as well. Now taking our Fibonacci there from the low to the high of the impulse where we're anticipating the market to go and pull back to, we can see how the 61.8 is lining up perfectly with the structural level over here. So we can definitely expect the market to go and hit that level, pull back till here, and then it's time for us to buy this market up until that level over there as well. Now looking at the order flow data, so what the big banks, hedge funds and institutions are doing in the market, we can see based off the last report for the Australian dollar, how hedge funds went and closed minus 6.2k long positions, and they also closed minus 4.8k short positions. We can also see how the overall net positions is now sitting at 80.354k as well. Here on JPY, we can see our net hedge funds added 1.960, 1.9k longs. They also added 723 short positions, and the overall net positions is currently, excuse me, went from 102k to about 52k there as well. So we can expect the JPY to get stronger in the short term, and that is exactly why we can expect the pullback to happen in the near future as well. Now looking at the sentiment data that we got over here, we can see based on the sentiment data. So what is sentiment data? Sentiment data refers to the overall positions that retail traders have in the market. The order flow data that we looked at now was what the big banks, hedge funds and their positions, and this is what we as retail traders have. You can see how the overall retail traders has got 51.65k longs, or 51.65 long, 51.65% long positions, and 48.35 of them are short. So I always say that you always want to be on the opposite side of what most retail traders are doing. So if they're going long, we're definitely going to be looking at selling it there as well. Now I quickly just want to discuss some fundamental data to just further stir up the pot that we got over here. Now starting with the AUD in terms of the monetary policy. So I'm going to speak about the AUD's monetary policy, the JPY's monetary policy, and then I'm also going to give you guys some feedback on the net positions that came from the Cftc, which is the commitment of traders report that we just spoke about now in terms of order flow data. Now in terms of the AUD monetary policy, we know that in December the Republic Bank of Australia kept the interest rates at 0.10, and weekly bond purchases were also capped at 4 billion AUD as well, and they're only going to do that until mid of February as well as expected. They also reiterated that they are committed to maintaining highly supportive monetary conditions and won't raise interest rates until inflation is substantially within their 2 to 3% target range. So they're not going to, in terms of the AUD, they're not going to hike any interest rates until they get to their inflation target, like they say, which are sitting between 2 to 3% as well. They also noted that the economy is recovering from the Delta slowdown and is expected to return to pre-Delta path within the first quarter of 2022. Now, the big takeaway from this, guys, is basically that the Omicron variant is not expected to derail the recovery. What does that mean? It just basically means that they are quite confident that the new Omicron virus is not going to derail the recovery of the economy, and that's how determined they are. Now, in terms of the CFT, so the commitment of traders analysis, also just doing a quick analysis on this here as well. So we know that the latest Cftc data shows that we have a net of non-commercial data sitting at minus 80k or minus 80.354. So we know that as outsized net shorts are usually seen as a contrarian indicator, and we want also to be very mindful of potential squeezes that we can expect to moving forward there as well. Let me just remove this, which means the AUD is likely to be more sensitive to positive data than negative data. And the recent positive news from China and the key Australian commodities already show some shorts being squeezed out last week. And as long as the Omicron doesn't cause a global meltdown, the prospects is starting to look better for the AUD going into 2022. So I also have to focus on the Omicron. So it's important to keep in mind here that as long as the Omicron virus doesn't impact the economy in general that much, I think we can expect the AUD to get quite stronger. Now, looking at the Japan yen in terms of the monetary policy, so at the December meeting, the Bank of Japan kept their policy unchanged apart from voting to scale back emergency pandemic relief funding from March, which includes tapering corporate bonds and commercial paper buying, but they also voted to extend a portion of the pandemic relief loan scheme to March for similar for smaller firms there as well. As always, the Bank of Japan came in and they said they are ready to add additional stimulus and easing steps as the economy needs it. We know the economy needs it because the Japan yen was not doing that great in the last couple of months last year. But the bank came through and they also reiterated that even though the economy has picked up, it does still remain in a severe situation due to the pandemic COVID-19. The bank also remains dovish and is unlikely to change anytime soon as well. Now, looking at the latest Cftc data for the Japan yen, the data showed a positive, a positioning change as we saw there as well, with a net non-commercial positions of minus 50. What was that we had over there? Let's check here quickly. Minus 52.286. Even though the Japan yen medium term outlook remains bearish, which is what we expect, the big net shorts for both large speculators and leveraged funds always increase the odds of mean reversion when the sentiment deteriorates. However, the size of the recent unwind has been substantial and leaves room for some downside, some bearish momentum on the Japan yen if risk assets can see some recoveries there as well. So we can definitely expect the AUD to get stronger as we move into 2022. So there is a slight pullback expected going into next week there as well, but the overall outlook for the AUD is quite bullish as long as the pandemic doesn't come in there and want to take us out as well. So that's the full breakdown. And as always, guys, if you enjoyed the video, as I said before, smash that like button, help the YouTube algorithm there as well, help some other people out there that's looking for valuable information like this as well. And as always, thank you so much for your time. Thank you for watching, and I hope you've learned something here today. And as always, cheers for ears.